Hi, this is Yvonne Michelle, and today we're going to be discussing special journals, sales and cash receipts. Upon reading this chapter, students should be able to organize and use a sales journal, journalize and record cash received, knowing when a company must have sales tax, use and post from special journals, understand and use subsidiary ledgers, manage refunds transactions with customers, journalize refund transactions, understand and use accounts receivable subsidiary ledgers, and use accounts receivable aging summary to manage customer accounts. Previous chapters have covered the general journal and journalizing transactions. We now introduce special journals that are used to record certain types of transactions. We use 4 special journals. We're covering the sales journal and cash receipts journal in this chapter, and chapter 12 covers the purchases and cash disbursement journal. There are times a business needs to have special journals that are used to record certain types of transactions, such as a special journal to record incoming cash and another one to record cash disbursements. Again, in this chapter, we'll be covering the sales journal and the cash receipts journal. These special journals can speed up the accounting process by streamlining journal entries and general ledger postings. The special journals also allow for separation of duties by batch or transaction type. The sales journal is used to record transactions for merchandise that your business sells on credit. It can be in single or multi-column format. If your business sells merchandise and offers payments on terms, it will need a sales journal. This is a special journal used to record transactions on merchandise that your business sells on store credit. In looking at the journal, the normal sales journal has 7 columns to record: the date of the transaction, the invoice number of the sale, the customer account affected, a posting reference, an accounts receivable debit, which is an increase to the normal debit balance ledger account, a sales tax payable credit, which is an increase to this ledger account, and a sales credit, which is an increase to that ledger account. While reviewing the columns, take note to sales tax, defined as a tax levied by state and local governments on retail sales. Businesses that sell merchandise are wholesalers or retails, or sometimes a combination of both. A wholesale business is a merchandising business that generally sells products to other businesses. A retail business is a merchandising business that sells products directly to the customer. Because sales taxes vary from state to state and can even vary for counties and cities, a business also needs to know not only the sales tax rates, but also when sales tax collected need to be paid to the government. When using the sales journal, you want to use the multi-column steps. In doing so, you're going to want to log the key data in the sales journal each day, and you need to make sure that for each sale your debits equal your credits. Then you will post all sales daily to the customer ledger, which is a debit posting. You total each column of the sales journal at the end of the month. You prove that the total debits equal the total credits, and then you post to the ledgers as indicated by the column headings. One of the many benefits of using a computerized accounting system is that you only have to enter a transaction once. In the case of a credit sales transaction, if it is posted correctly, the detail automatically posts to the general ledger, to the accounts receivable subsidiary account, and to the correct customer account. In this process, an accounts receivable ledger is a subsidiary ledger that contains details about each customer account, defined as the record of the amounts an individual customer has bought on store credit, as well as payments received from the customer. In our system, we have 2 primary subsidiary accounts, the accounts receivable ledger and an accounts payable ledger, which will be covered next chapter. Even if your business offers credit sales, you will need a cash receipts journal, a special journal used to record incoming cash. To be sure the use of the term cash is clear, it doesn't refer just to currency and coin. It also includes checks and credit cards, which are not store credit, and debit card transactions. While most cash comes from cash sales, other sources of cash received include deposits of capital from the owner, customer payments against invoices, proceeds from a new loan, and interest income. Compared to a sales journal, a normal cash receipts journal has 8 columns: the date of the transaction, the account credited, a posting reference, a general credit column, proceeds not from sales or customer payments, sales credit, sales tax payable credit, accounts receivable credit, and a cash debit. We stated that most cash received comes from sales. Most businesses collect some sort of cash payment for goods or services sold and provide a sales slip, defined as a source document for cash sales and transactions. Also called a sales receipt, the sales slip serves 2 purposes. It's a customer's proof of purchase and is a store receipt to post to the company's books. Other than cash receipts from sales, you record cash receipts from other sources. You can collect a payment against a customer invoice, which is a payment to accounts receivable. Owners can make additional investment contributions to their capital. You receive proceeds from a new loan or earn interest income. We define interest as the cost of borrowing money and earn interest from money which we have invested. Therefore, interest income is the general ledger account used to track any income earned in a company's savings account, certificate of deposit, or similar interest investment vehicle. On the issue of interest earned or interest paid, there are 2 interest calculations. Simple interest is an amount of interest that is calculated by applying the rate to the principal only, and compound interest is an amount of interest that is calculated by applying the rate to both the principal and any interest previously earned. We can also earn interest on our customer receipts. The journal sequence for a cash receipts journal is to log key data in the cash receipts journal daily. Be sure that for each transaction, a debit equals a credit. Post all payments made by customers to their individual ledger account, which is a credit posting. At the month end, total each column of the cash receipts journal. Prove that your total debits equal your total credits, and post to ledgers as indicated by column headings. Every business that sells must know that at some time concessions must be made for either sales returns or sales allowances. These reflect merchandise that is returned or concessions given for a myriad of reasons. A customer changed their mind, the merchandise was defective, it didn't fit, or any other number of reasons. You cannot effectively have a policy to provide full credit for all returns. You also cannot have a flat no return policy. There are always reasons for returns, and for good customer service you must handle these. A sales return is a company's acceptance of a return of merchandise from a customer, and a sale allowance is a reduction in the price originally charged for the merchandise. When a sale is first made, the transaction is posted to sales. Sales returns and allowances is a contra account used to track sales returns and sales allowances. This means that the normal balance of this account is a debit balance to offset the normal balance of the sales account, which is a credit balance. These contra accounts are opposite of the related account's normal balance. If a business has a large number of sales returns and allowances, it may set up a special journal for this purpose. A sales return or allowance can affect either a previous cash sale or a credit sale, and posting should reflect this appropriately. If it was a credit sale, the offset to the return or allowance will be a credit to the accounts receivable, as well as the accounts receivable subsidiary ledger and the customer account. If it was a cash sale, then the return or allowance will be offset by a credit to cash. The last subject of this chapter is the accounts receivable aging summary, which is a detailed report that shows the money due from the customers and how long it has been due. This report has columns that show each customer's balance aged from current to over 90 days, as well as the total for each column. This report can be used for several purposes. It can be used to see how well your collection department is doing their job. You can use it to focus on the specific accounts that are falling behind, and you can refuse to sell to a customer until they pay a past due balance. Regardless of how you use the information, this aging report can be a very valuable management tool. And this concludes Chapter 11, Special Journals, the Sales and Cash Receipts Journals.